Welcome to another live stream of Panic Drop. We're gonna look at some charts. I wanna look at the S&P 500. I wanna look at crypto. Wanna chat a little bit about the AI agent that I've been using to trade Bitcoin. We have semiconductors having a little pullback. So yeah, let's look at how those are doing. Hi, James. Hi, Gary. Hi, the Global Pulse. Hi, AD, Alain, Brooksy. Great you're joining. If you have questions, do let me know. If you want me to look at some charts, we can review them. But yeah, today I just want to check on the market and see what we can find for opportunities. So the market, of course, had a massive correction in Q1, 10%, almost 10% down, and then a historical recovery. So this was really a massive recovery. I don't think a lot of people expected this recovery, and it has been going up ever since. So um, now the question is the market overbought? Should we take profits and wait for a deeper correction? And actually, I posted in um, X today, so my X profile, about how the market is actually primed to even trend higher. So um, go to my profile, and there was one post I did here. So showing the S&P is up 6 weeks in a row, 6 weeks in a row, with a win streak above 13%. And um, this happened a lot of times, but with a win streak above 13% only happened now 3 times. So you had 1962 and 2009, and we had last week when it triggered. Interestingly enough, 6 months later, all those cases saw a double-digit gain. That makes it very probable that the market is definitely gonna be green by for the year, but also um, probably going to be a double-digit gain for this year. So it's looking very bullish for the market right now, in my opinion, and also based on some of the data that I'm seeing. We have earnings lifting the market. So people would ask, like, why would the market continue higher? Well, it's because every time, every week, the earnings is getting revised higher. So if you look at where we were just a few weeks ago, um, earnings were lower at estimates, and now they are revised higher, meaning that the value that you're getting is improving just because earnings are accelerating so fast. So that's why I think we can argue that there won't be a big bear market just because earnings are pulling stocks so much higher. And we know it's earnings that cause stocks to go up in the long run. And institutions know this, and they have been actually pumping money into the market more recently, which was even after the big rally. I just noticed that you were not able to see my tweet. Maybe I can share the screen again and show you my X tweet. So here it was explaining earnings are constantly being revised higher. And if you compare this with a few weeks ago, the value is basically increasing. And this was the data I found on a 6 week rally, which had a bigger gain than 13%. So only three times it happened. We had 1962 and 2009, and then we had last week, of course. And all those cases had a double-digit gain 6 months later. So yeah, interesting statistics showing that we could see a rally um, going further into this year. By the way, Sparky Trader, thanks for joining. For Flying Pandas, thanks for joining. Then looking at, of course, the one bubble in the market, SMH is the semiconductor ETF. Now, we can say this is a bubble, but what we cannot say is when is it gonna pop. And last week I said with um, some research from other institutions that we're not very overbought yet, like the dot-com era. So we could still trend higher for semiconductors. But even in a bull market, you can have multiple corrections, pullbacks that go over double digits. So that's very normal. So you could see semiconductors have a correction all the way down and then move higher again. That will be very normal. What's important for you is to understand this is a bubble that will pop, even though earnings are going higher. The parabolic move that it's seeing, it's not sustainable. So eventually, whether it's in 1 month or 1 year later, there will be a pop. And you have to understand that whenever you're investing or trading semiconductors today, you need to have an exit plan. You don't want to be holding the bag while everyone is selling out. We saw this in silver. So I remember I was scaling out of silver, even though it could have been way lower here, but scaling out as things were going parabolic. I even remember selling at around $100. And of course, this can recover, but um, it's been a long consolidation since. And the same thing can happen to semiconductors today. So you want to be scaling out when things go parabolic, because yeah, it can crash really hard. And if you compare to the dot-com era, some stocks never come back. Some stocks remain at a loss for a long time. So be careful if you are trading separate individual semiconductor stocks. You need to take profits. So now the question is, where is the money going to go during this correction? Especially when the S&P 500 is going to be negative, I think it could go into the defensive stocks. So we have consumer staples. I remember buying this breakout and then selling after this move. You can see that it's currently back above this level. So maybe we could see a move higher again for staples this year. So I've been buying into the uh, staple stocks, just yeah, to position. Another um, sector that has been beaten down a lot is um, XLV, is the healthcare sector. So the healthcare sector has been beaten down a lot as well, underperforming the market, so underperforming the stock market. Now, what we saw in healthcare was actually very disappointing earnings, and earnings have been revised down. It was the only sector where earnings was revised down, which is not a good look at first glance. But when things are um, perceived very negative and growth is perceived very low, we could have a next quarter where they surprise, and then we might see a um, move up because expectations were actually too low. And that's what I'm positioning myself for, because we know healthcare is a growth sector that usually outperforms the S&P 500. So whether it's this year or next year, I think it's wise to have some positions into healthcare to see where, yeah, to to wait for a reversal up again and a outperformance of the stock market again. So yeah, hope you find this interesting. We have a question from 80. So what do you think about the software sector? That's actually a good question. So software section sector XLK. Um, Sorry, this is the technology sector, but we have the software sector. I don't remember the name of the sector again, but I think most are watching stocks like Microsoft, which I am buying. By the way, I I think if you're owning software stocks, it should be the leaders, and Microsoft is one of the leaders. You can also see earnings are always doing really well above estimates. So if you're buying software, you have to be buying the ones where earnings are growing as well. Another one that I like is Now. I've been accumulating Now for a couple of months now, and I think, yeah, eventually this one will recover as well. Software sector very over sold, of course, but remember, you have to keep your allocation um, very how do I say this, um, I wouldn't say small, but don't over allocate, because we don't know when this sector is going to recover. There is still a lot of fear that AI is going to disrupt it. Investors are going to price in the worst case scenario. So, um, my allocation into the software sector is mainly Microsoft, and now I do have like smaller allocation into Salesforce and some other small players, but I prefer not to buy those and focus a little bit more on, yeah, Microsoft and Now, because I think those are the leaders within the space. It's hard to tell when they will eventually make new highs again. Um, but as you know, and as I said many, many times, I mean, their earnings are going up. So the price will eventually catch up. And that's what I'm betting on. But I won't over allocate. So what I'm doing is buying in tranches and when my allocation is a little bit too high, I will still buy, but sell at a profit, because we know eventually these stocks will recover again and make new highs again. So it's basically buying during the dip and selling during a rip, while holding a allocation in my portfolio, just to gain some more cash on these positions. I remember last week we discussed Nvidia. So Nvidia basically discussed when it was trading around 200s, and I showed a quant that um, told me, or showed us, there was a high probability that Nvidia would be trading higher 1 month from now. So it was in the buy zone, um, below $198, and I was buying Nvidia. And ever since, it's been doing pretty well, making new all-time highs. I was also watching the Nvidia versus semiconductor sector. So as you can see on the monthly chart, this was something I found interesting, putting in the 50-week, 50-month moving average. You can see every time we have a tag, it eventually um, reverses and goes higher. So it has a tag and then goes higher, tag goes higher. And we're seeing the same right now. So hopefully, Nvidia can outperform the whole semiconductor sector. We have earnings soon for Nvidia. I mean, it's my biggest allocation in my portfolio. So of course, I want it to go up. But usually, when this bounce happens, it doesn't mean Nvidia price will go up. It just means it will outperform the semiconductor sector. So you could have AMD, Micron dropping 10%, Nvidia only dropping 5%. That just means Nvidia is going higher against the semiconductor sector. So it could be Nvidia goes up higher than semiconductors, or it could be Nvidia goes down, but way less than these the semiconductor sector. Okay, so that's something interesting you can read from this chart. I am positioning for a um, a move from Nvidia when it has earnings, because most companies actually have beaten their earnings, and I do think Nvidia will beat as well. But you never know. After earnings, things can move in the opposite direction, even though if Nvidia is beating earnings, investors sometime expect a really high earnings and revenue from those companies, and then the price dumps because the earnings was higher but not high enough. So that's something that can happen, of course, but that simply means that I will be buying more Nvidia if it drops. Hi Cook, and hi Maria, for thank you for joining. Guys, if you have questions, do let me know. Now we're gonna look at crypto. So Bitcoin briefly dipped below 80K today. So we saw a lot of people freaking out when it did so. And it's hanging on there. So we had a nice move so far, almost hitting 85K. I was targeting that 85K level. Hasn't hit there yet, but it's an important level to break and flip a lot of bears into bulls. I think a lot of technical analysts are checking this level. So this is the 85K level. this is the level you want to see broken. And yeah, I wanted to show a chart from the cycle view. So let me quickly pull up the chart. Just a second. Hi, Sergio. Thanks for joining. So we have Substack. Okay. This is a message I've sent in the Substack chat. Those who are inside knows what it is. So this basically tracks the Bitcoin cycle. And so far, I remember it was posted in the beginning of the year, and it has been quite accurate. So a decent bounce from the lows in uh, April or March, and it will be topping somewhere in June, July. So that means there's still, based on this cycle view, there is still a upside, a possibility of upside for the next couple of weeks. So that's why I do think 85, maybe 90K could get hit. But of course, after such a move, you should expect some pullback. I remember, like, I'm still telling everyone, okay, the 4 year cycle is telling us that we could see a drop and even a lower low into October, November, just because that's what has been happening for the last couple of years in the 4 year cycle. But I am open minded that the ETF inflow, all the money, all the pickpockets from institutions could cause the cycle to change a little bit, where you might not have a lower low here, but just a higher low here and then a trend higher. So I am open minded to that. So I will start to accumulate more Bitcoin for my portfolio, even if we're not dropping below this level. The time frame for accumulating should be around October, November. This is very accurate to the 4 year cycle. So when Bitcoin is still trading above 70K, let's say in October, November, I would be accumulating Bitcoin because I don't want to be left out for the next bull market. Now, I would be happy if markets drop lower. So if it can go to 50K, 60K, why not? I will be buying, of course. So yeah, that's currently how I view Bitcoin. It has been holding up pretty strong. And I do think we have diminishing returns throughout the cycles. So I remember first cycle was something around 90% crash. Then it became 80, 85. Last time was 75% in the last cycle. So maybe this cycle was enough to see a crash of this magnitude. Let's see how much it is currently. So I'm going to share my charts again. So from the highs, I can check my indicator. It's down currently 35, 36%. And let's see from high to low. I think it was something around 50%, 52%. So 52%, still a decent correction. So my first idea was, because of the 4 year cycle, um, we would be trending lower and taking out this low somewhere in Q4. But I'm open to the idea just because there's a lot of inflow of institutional money that we make a higher low. So that will be something like this. Maybe we trend a little bit higher here and then move down here. So somewhere here, maybe a higher low here, and then the next bull phase starts. So the plan would be to slowly accumulate in this time frame as we enter the end of the bull market. It is still a few days, of course, so around 4 months before we are in the end of the bear phase of the bull market of the bear market for Bitcoin. So there it can still do a lot in this time frame, but I will slowly increase my allocation into crypto as we enter the end of the year. And I'm mainly talking about Bitcoin, of course, because usually what happens, Bitcoin leads, and it's only in a later phase where altcoins, um, yeah, catch up. And I think it's still going to be a selective market where you're gonna see dominance go up, and when it goes down, it's not all the altcoins that do well. It's just gonna be a few selective altcoins. And yeah, that's what I check every week with the altcoin playbook to see what coins are doing well, what coins are deserving my attention. And yeah, that's how you can find some gems in the market. I can give you a few example. Of course, we had recently um, Dexy doing really well. We watched a Venice token. I'm not sure if I can find it here. Venice token did really well. So you can still find a lot of strength. This one is trading on eToro, by the way, so you can buy this on eToro. So you can still find a few decent uptrends to trade, but just buy and hold, not the case. So careful if you're just holding altcoins for the long run. I know some of you hold, for example, H bar. Um, if you look at the chart, um, I covered it, but once it started to break down, I said, okay, better move on. And I remember this was somewhere at 20 cents, and now it's trading at 50% lower. So you have to be careful if you're holding altcoins, of course. So that's basically it. I see there's a question. What do you think about the Clarity Act in relation with Bitcoin's 4 year cycle? So it's of course bullish to see regulations turning in favor for Bitcoin. It's only going to lead to more inflow by institutions, by big pockets. So the normal portfolio will not only be stocks, but in the future it will be Bitcoin. And how will it change the 4 year cycle? Well, I still believe that cycles is not only about price. Cycles can be, yes, about price, where it corrects down and makes a low at the end of the cycle, but it can also end with time capitulation, which means people lose interest just because the bear phase is taking 1 year. It's a lot. It's a long time. So sometimes it just needs enough time to reset sentiment, where we could have extreme fear again, even if the price isn't lower. And yeah, that's actually what you wanna, what I prefer to see, where it's not going much lower, it's just going sideways, and this gives us time to accumulate more Bitcoin. But the general 4-year cycle stays the same, where you will still have a bull phase and a bear phase. For now, we always saw a right translated cycle for Bitcoin within the 4-year cycle. So that simply means if you look at how the 4-year cycle is divided, you have the half of the 4-year cycle somewhere here. And if the top comes at the right part of the 4-year cycle, it's a right translated cycle. If the top comes somewhere in the left part of the 4-year cycle, then it's a left translated cycle. And one day in the future, we're gonna see a left translated cycle, which means price goes up, makes a high, but then for the next couple of months until the bear market ends, so that could take 2 years, 3 years of a bear market. So we will have something like that. But my opinion is, now with all the institutional flow of money, we will still see a right translated cycle um, in the next bull market. So I am very bullish for the next cycle actually. So bullish on um, regulation, of course. Bullish on regulation, and this will have only positive influence on the price. But we cannot deny that there will also be, um, yeah, a bull market and a bear market, as it has always been. So the 4-year cycle is still in play, in my opinion. So guys, that's it for today. That's basically what I wanted to cover today. Hope you enjoyed it. If you don't follow me, you can subscribe. Maybe before I end, I can give you a quick update on my trading agent. For those that are still watching, I can share my screen for my AI agent trading Bitcoin. Um, I have two agents trading Bitcoin for me. So this is all done automatically. People that are in the Panic Drop newsletter and are paid subscribers, they have access to a few modules explaining how to set up a agent trading Bitcoin. Actually, the one that is released is trading leverage. So this was an agent entering here, and so far it's in profit, but it does has a stop loss, and it's following a indicator that I created with AI, and that's the indicator paid subscribers have and learn how to use it for their own AI agent. This one can get the levels, because right now, yeah, it's not showing. Here you can see there's a lot of buying, selling um, of Bitcoin, and it's very simple. When Bitcoin drops to uh, a 1% down level, it will simply buy Bitcoin, and then when it's gaining 1% returns, it's selling it again. So you could say that's not a lot, only 1%, but do this multiple times every day, and you will make profits over time. Just because we know Bitcoin is an asset class that makes new highs every cycle. So I'm not afraid of buying Bitcoin all the way down. Um, so I will buy at every 1% dip and then sell at one every 1% gain. And doing that, it's making me money, and it's basically a 100% win rate. So buying on dips and selling on rips. Um, but very complex for the AI agent to actually perform well, because it's constantly forgetting what to do because there's so many levels to buy. Maybe I can show you my orders. So there's a lot of orders waiting to get filled, and it has to know whenever one position is filled to sell that specific position at a 1% profit. And sometimes it's failing, sometimes it's using another position. So I constantly have to um, yeah, explain to the AI agent what to do instead. So it's taking a lot of time, but once this process is clean and learned, I can give this indicator as well to the paid subscribers in the Panic Drop newsletter. So definitely um, subscribe and hear me about it more in the future. So I will experiment with it and share with you how this is going. So of course, this is the end. Nothing else for me to explain. Thanks for watching all. AD, Jonathan, Sergio, Maria, Brooksy, everyone that joined. Maybe I'll try to do a stream every week. We'll see. So thanks for watching and have a great evening. Bye all.